Hello, 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 everyone. Good morning. How is everyone doing? First day of September. Happy September. Wake me up when September ends. Historically, if we've been down more than 10% going into September, September will on average be down about 8%. Is that guaranteed? No, nothing's guaranteed in trading, but you need to be aware of that. And September historically is the worst performing month for the financial futures. Do keep that in mind. So, that's where we sit. Happy September. Good morning, Davey. Good morning, Patrick. Good morning, Eric. Good morning, Jacob. Good morning, Lauren. You're at least on time today, Lauren. Good morning, Anissa. Good morning, Legion. Legion Reaver. Good morning. Thank you for being here. Morning, hoping September lives up to its reputation. It may very well, George. Again, thank you, everybody, for tuning in this morning. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer-term subscribers, you know what to do. Leave some comments and hit the like the mic button. Like the mic button. Right time, right channel. All right, let's see where we sit. We had the continuing Challenger jobless cuts coming in better than previous. Continuing jobless claims coming in right in line. I think the revised was better. Initial jobless claims coming in much better than expected. So from this standpoint, labor market's holding up. What else do we sit? Non-farm productivity coming in better than forecast. Labor unit costs still high, but better than forecast. Remember, SB manufacturing PMI in about 40 minutes, but 15 minutes after the open. That's the smaller to medium firms. The large firms are the ISM numbers coming in at 9 Central. The big thing to watch for, not only is it coming in with forecast, but whether it stays out of contraction. Anything below 50 is contraction. What else? I'm going to be keeping an eye on prices, especially. And then we got more Bostic speaking 30 minutes before the close. Mixed markets this morning, some up, some down. We'll glance at that. Specifically, Nvidia hit the targets already on that double. And as I said before, we'll glance at that chart. But if it hits aftermarket or pre-market, you can unwind positions there. FMOC still 72% to 28% favoring the 75 basis hike. Still in pretty deep negative gamma. So upside and the downside, you can see increased volatility. I did check Hormel and Campbell's. Mixed stuff of Campbell's way down this morning. Massive gap. I think they hit, I can't remember. I'll have to glance at those if you want. After the close, the only things I'm looking at are Lululemon and Broadcom. And then tomorrow is nada, except for non-farm payrolls. All right, let's see. My 401k investment options are horrible. I think money in dark could trade better than money managers. When your options as investors are so limited, why would they care? It's the same with my wife at work with her 401k plan. I'm like, can I have a option that doesn't suck? And they're like, no, they all suck. They didn't say that, but I'm like, I don't want any of these. I just want to be in cash. Literally, with everything you're giving me, is there any fund that I could go in that maybe specializes to the short side or is not in a bunch of stuff that they're like, oh, look at this investments for the past year. It outperformed at this. I'm like, that's not going to outperform next year. Oh, well, it should. I'm like, no, you're going to get crushed. I want something different, but there aren't good options. So literally, I have it in short term, like the 1 to 3 month treasuries, which will even take a hit in this environment, but it'll be a minimum hit. We can peek it. Will remind me about Lulu, short everything. Coco, you were long everything. Now you're short everything. You're like the whipsaw trade, Coco. Good morning, options 22. Cash is not trash. See, that's an ignorant statement. You got to stop with the ignorant statement. Sometimes cash is a trade. Cash is not trash. You need to have your investments freed up for great opportunities. Now, if you don't play by the short side, then I think cash is a great thing to have a lot more of your portfolio in. There's not a lot of great valuations if you trade from your short side. I still think you should keep, look, there's a times to have longs, and if you're not in a lot of longs, I wouldn't have a portfolio 100% dedicated to short. So you might be in part of cash because you're not in any good long positions right now. And there aren't many good long positions right now. There's a smattering here and there. Yes, we know what you want, options 22. Remember, if you want to support the channel, you can always super chat it too. Cash and patience. Let's see. You don't always have to be fully invested in, and if you're not fully invested, you should have, you can be part in cash. You don't have to be also fully longs or shorts. Cash is king. See? Yeah, but you can also protect your cash. And there's a point to, look, the markets can also, let's say you're a long only trader, the markets drop another 20%, you'd be better to be in cash even with inflation. And there aren't a lot of good alternatives. Sometimes the least damaging alternative is the best alternative. Shorting is the way now. I'm so short, I've been doing sit-ups under the card. There you go. All right, let's get to this. We got a lot of ground to cover. Remember, we are in oversold condition with daily cycles at the bottom. Second target hit. I am watching for a short-term bounce play. Does not necessarily have to happen today, but we are setting up for potential reversal plays, and they would be very short-term bounces. So do not get caught off guard if you see a bounce coming in. Short-term, I mean, it's right now minor level about 39.35, more significant. Watch that 1 hour rotation zone coming in with roughly about 39.42. Those are the areas I'm watching. If we do break above this 1 hour rotation zone in this 39.42 area, this is an advanced clear path. All right. You're going to get, and this is where you look at the minor. See, even on the 15-minute, you just have this little minor hitch area in there. So if you're trading shorter term, it would be 39.58. But on your 1 hour, your breakdown zone would be 39.78. Is that necessary for today? No. But we start trading into that, you could easily see a little follow through to the upside. Then other than that, also, it would be more helpful if that got into there after we hit that 4 hour rotation zone. And on the 4 hour basis, it's just a regular clear path. So that 4 hour trade, which means you could get a hitch up here and then a little pullback and then the follow through. The breakdown zone still the 39.78, and then above there, the end of that clear path is right here, 4,000. So on any rallies, 39.78 to 4,000 is where I'd be positioned if you were trying to grab a short-term bounce. Other than that, if you're longer term, I'd be using any rallies for repositioning to the short side. That potential double is off the table. All right, so it would just be these potential corrective moves. And remember, corrective moves can be sideways also. So we could get choppy bounces in here, letting the rotation zone on the daily catch up. That can also take us out of oversold condition. Remember that. That's why I'm not overly aggressive bullish. It would be choppy to bullish unless we get some major momentum. Nasdaq, second target hit. Harmonic also hit. We still have the targets below. We are oversold. Cycles at the bottom. Not much else to talk about unless we get the bounce play. The area I'm watching is about 12,245, 12,250. We do have a stopping point at 12,300, and then the next key area is 12,455. This the rotation zone on the 4-hour could be out of the way if we get, especially a close about 12 245. Then I would really focus on the breakdown zone and then the other end of the 4-hour rotation zone. If we roll down, next key area is this 1267, then 12,000, and then major is this 11.9. But remember to keep an eye on the 62.5s, even though I didn't talk about it on the S&P. If we get especially a daily close below that, I'm really focusing after the next bounce on a return to the June lows faster rather than slower. Dow, I'm sounding like a broken record. Next harmonic level hit, 62.5. Pay a close attention to the Dow where it closes today. The 62.5 is 31,367. Still oversold. Cycles at the bottom. Next thing lines up exactly pretty much 31,150, 31,157. So that's the next major area to complete the harmonic and the head and shoulders. Minor levels. You're into a clear path move here. I'd start paying attention if we get above about 31.5, 31.550, then 31.712 would be the first target. Then the end of the clear path is 31.832. Then you got 31.963. Let me get through these quickly. Russell, first target finally hit. Harmonic finally hit. Next major area is 1808. I'm watching those still on the bounce now. It would be back above the first target, about 1840. Then I'd be playing to the harmonic, which is also the breakdown zone, 1851. The potential double off the table never came close to triggering. So those are the key things on the Russell. Again, everything's in oversold and cycles at the bottom. DAX double off the table. Remember, just because you have potential trades does not make them actual trades. Let's just see if there's anything. I'm still expecting the DAX to hit 12,573 and below on the next rollover. Key resistance, even if we fill the gap, would love this little gap fill for another rollover play. That'd be roughly to 12.8. The exact gap fill play would be to 12.813. Going to be watching any bounce play for a rollover at this point. Your key resistance roughly coming in just above that gap fill play, about 12.830. Notes as we close back below that 62.5, killed that inverse head and shoulders. Next major target is 115.07, even on any rallies. We do have a pretty substantial gap down, so that would be the only target on any bullish short-term play. Still expecting us to get, and by the way, now we do have a potential double bottom. Not even going to chart it out yet. I'm going to wait for some kind of, because I'm going to use the conservative targets on that. So going to wait for some kind of daily bottoming, and it's a long way off from triggering. And we could still rotate up and hit a triple bottom. But just wanted to say that we have officially met the first criteria for a massive potential double bottom. And this time, the rotation zone on the weekly would be out of the way, and the bottom of the monthly would be out of the way. So it's something to keep in mind longer term, but there is no bullish trade at the short term besides a little micro bounce play. Dollar index rotating back up, rotation zone. That's why we follow it. This is turning into a triple top area with this rotation. It didn't actually pull back far enough to invalidate it. But it looks like it's going to plow through here. Next target, 11,967 to 11,962. So what I'm watching, but you see how we dipped in, then minor dip, rotation back up. Also, we had the percent B buy on the, no, we didn't actually get one on that. Sorry, we did not. Just a rotation play. Crude. We stopped that out and was focusing on retesting this low area, which we've done. Anything would be just a minor bounce play to the upside, but not much going on there. Let me just see. VIX. We do have a potential double top if we do get a short-term rally on, but that's a fair amount away from triggering. 25.13 you need on a closing basis, and now against the daily rotation zone. I'll get sort of keeping tip to the bearish side if we start getting some trades above 27.72 and that level holds. So that's where, I mean, right now we're at 26.85, but 27.72 is my key mode that I'm watching. Other than that, support coming in about 26.25. Euro never triggered that double, rotating back down, catching on that daily rotation zone, which is why we follow it. Watching for this to turn into a triple and then probably a trade down to 98.50. Japanese yen plowing up, targeting 140.51. Bitcoin staying in consolidation. This is pretty much a sideways correction with the 8 catching up, nearly invalidating that double, but not quite. Let's glance at a couple other things. Tesla's still, from even if we get a bounce play, still longer term in the bearish mode. Not much going on there. If you do get a break above yesterday's high, then it would be just a quick pop to about 287. Other than that, same targets in place. 262 to the downside, first target. What else do we have? I know we want the spiders, the Qs, not soy, SPY. There we go. Again, second target was hit yesterday. Final target 390.88, trading 392.92. Any bullish play would be for the gap fill yesterday and a return to the prior target. So the gap fill would be 395.18. Then I'd use 395.88 as the next area. Then above there, 398.92. And then 401.10 would be major with the declining 4-hour rotation zone. That's all to the upside. To the downside, it's really just this 390.66 target. And there's, not only is that the target for the head and shoulders, that's also this prior major resistance becoming support. So resistance, tested with support. So that's going to be there's going to be a lot of resting orders down here. That's why I would not try to push it much below without a bounce, and then I'd use harmonics off those levels. And remember, the key closing level on the spiders is 388.21 on a daily basis. We are within the short-term reversal zone, so anywhere in this range, we could watch for a short-term bounce, especially in oversold conditions, with cycles being at the bottom. So don't get caught off guard once we do get that minor bounce play. Qs 298.89. Pre-market's going to hit that target. So remember, you can unwind stuff pre-market for hitting targets. So what would it be watching at this point? Then the gap fill play to the upside, 299.27. Above that, that's going to invalidate any double, but above that, it would be 303.75 with the 4-hour rotation zone would be this key major area I'd be watching for first level resistance. Above there would be 306.13. Remember, your key area 293.71. I would use this for an intraday target because of these lows and these resistance highs. I'd use this target area. About 395 to about 294. 294 to 295 would be my first target area if we did break below these key pre-market lows. And then it would be 291.47. Those are all the upside and downside targets. Let's see where we sit. Raj, what's up with oil? We got some more China lockdowns. Longer term, we're still in the bearish place for oil. Short term, it was that fake out play with the double being triggered. I'm watching for a retest as low area. Other than that, any rally, even short term rallies, I'm looking for sell patterns. Still a lot of weakness, a lot of slowdown plays in oil. What else do we want? We want a Lulu. Going into earnings. I mean, really the only thing is you have this sloppy double. I mean, sloppy head and shoulders on Lulu from that shorter term perspective. Longer term, I'm just watching for this earnings where it is with relative to 280. There's just not a great setup. Well, that's the weekly 200. The daily, here's your little mini reversal pattern if you want those targets going into earnings. It's a little sloppy here. You don't have as great shoulder, but it can be traded that way. And it's a little choppy to the downside, but I would utilize those targets. So on a bigger, and that comes in right in line, and you do have this clear path move it's closed into, and the target for the clear path move is roughly 280. Give you 285.55. The target's 286.90. So on a move down, that would be the targets for Lulu. On any gap up, unless it's a super insane gap, I'd just be targeting the neck about 311 to about 315 on any move up. It favors, though, the bearish completion based off that pattern. And I'd be watching. Let's go back to the weekly again. And on that weekly basis, on a bigger gap down, the target would be about 281. Let me just get to Nvidia. Again, this hit the target pre-market, so this trade is over. I will leave up that target for actual trading, but that was 142.84. If you look here, remember, you can set targets depending on your brokers for pre and post market levels to get hit, and you could get liquidated in there. So we were down. Oh, where's my trading? Here we go. Extended trading hours. You can see here coming down, getting that little bounce off that play. So that target is officially hit. Wanted to get your get you high on caffeine this morning with 25 buy me a coffee shots this morning for all your great guidance and teaching. Thank you very much. Options 22. Again, I really appreciate everybody who helps support this channel and keep it free for everybody so we can all learn together. Hey, Christoph, haven't seen you in a bit. Hope you are well. How's everything over in Europe? The average fund of my 401k is down over 18%. I have to pay these experts. You know what? You'd be better to just tune into this channel. Tell them to tune into this channel, the experts. Nvidia is dying slowly. It has hit the targets. Would not be surprised to see a short term. Remember, we got the pressure on the semis from those. They can't export the chips to China anymore. And that's probably going to increase the timeline on the invasion of Taiwan at some point. Remember, AMD, just for a play, has not issued guidance. I'm actually watching now for more bearish plays in AMD, targeting 75.72 to 71.60. Hey, Ken. Good to see you. I haven't seen you around for a bit. Hope everything is well with you. I'm seeing a potential bounce to 288, 290 in Tesla, then a rollover. What do you think? We did glance at Tesla earlier. The key area would be 282. And then 287.88 on any bounce plays with the first cross. Remember, it did trigger the double top, so it statistically favors the downside move. The only thing, we are an oversold. If we do get a minor bounce in the markets, I will watch for that minor bounce in Tesla before the continuation play to the short side. I only hit the down button on elevators. Let's see. For all of September, I'm only writing with a red pen. Hey, Andrew. Thank you for being here. Everybody say hi to Andrew. I'm going to see bear flag forming on the 10-2s, treasuries on the daily. I'm just going to keep going in the open today. Let's just keep this going. We got some good teaching going. If you can stick around in the open, let's just keep an eye on stuff. Yes. You do have a bear flag, and you do remember to trigger double. You do have a bear flag. Now remember, as this starts accelerating towards zero, that's where we get really interested in the big market tip over. And this, you know, triggered the double, pulled back to the breakout zone, and then moving on up to the Upper East Side to a deluxe apartment in the sky. 19.5 is the next level, and yes, it could be traded. What's interesting is this target is roughly the double target is the flag pattern to the top. But coming out of this, I definitely, you know, you might get another rollover play, but I am leaning that the longer term bottom is in on this. Because we're also hitting finally the rotation zone. Might get another reaction here, but then we're into the rotation zone, into a clear path move with the weekly other side of the rotation zone. So do pay attention to that, because after the secondary reaction with the weekly rotation zone, we could start our acceleration back to the 0.7 to 0 area, where I start getting more and more bearish. Tom, we don't even need to talk to you. Hey, Rams the fall. Let's see. Back to the Qs. Let's just see where this is opening. All right. Oh, Qs opening straight at the next target. Wow. You gotta love it. From bottom 269 to top 341, the most recent run that has broken the 50% retracement 302. Yes, we're going to, the next key level would be the 62.5, even on any bounces, and then the close below 62.5 confirms the probabilities that we retest the June lows between 277 and 269. And that's where I love to use these harmonics to trade around. Do they have to be the exact stopping point? No, but it gives you a very distinct roadmap. And I would not ignore, just in the short term, this 295 level, just to reiterate. We covered Nvidia. Don't be stupid to buy puts and get slaughtered. Hey, the puts, what happens when you get a bearish signal that's hit the first and second targets? See, you can trade puts and make money. What do you mean? What do you mean? This was fantastic trading in the puts. If you were trading calls this whole way up, unless they're super long term, you're getting slaughtered. Don't be ignorant. Short ES at 416. Yesterday I saw his lower right shoulder on daily. The shoulder on the head and shoulders from the daily patterns were all the way up here, Andrew. Keep tuning in. You'll learn a lot here, but the shoulder was actually back from August 26th. It formed between the 24th and the 26th. Here's the left shoulder. Here's the right shoulder. There's nothing now. You cannot trade this as another head and shoulder in a head and shoulder. Well, I think we did Tesla a couple times. AVGO. You got your end of the move. That'd be my longer term targets, 475, 475.25, 475.22. Any, you're still into, this is an advanced clear path. You still a gap fill. So I'd use a gap fill as a stop reduction, 484.64. This is the end of the clear path move. And let's do the harmonics. You closed yesterday below the 62.5, and look at that. Look where the 87.5 is at the end of the clear path move. So you have a very clear target even on any bounces. Earnings went, what's this, today? After the close. So even on any gap up, it's just be resumption of short trends, and the gap plays would be 512 to 524 on a bigger gap. But your minor play would just be a return to this level. Overall, probability wise, you favor a retest of the lows. And then remember, look at this. You could not get back above the 200. Let's take a look at the weekly. Wow. Weekly. Whew. So there could be some more substantial downside to this. And once you get below new lows, the next key area I'd be focusing on is about 440. Yeah, still. This PE can keep coming in over the next few months. Looks like they have a tendency to beat, so it'll be interesting. You might get the little gap up and then have to do another rollover play from if you're going from the short side. Let's see. Hey, Connor, happy September. Let's see where we are right now with the breakdown. Are we continuing lower? Again, the level we can get some decent choppy trading. I'm going to get interested if we start really breaking down with these 8:45, 9 a.m. numbers below 39.25 to about 39.21 is my key support area on the S&P. We start breaking down with that. If we get the crappy ISM numbers or the S&P numbers, then if you needed a short term, remember, if you needed short term, this could also be a little, keep an eye on this. If this starts breaking down with some momentum, we could have a short, very short term shake and bake pattern. You see what I'm seeing? I'm just trying to show you some real time stuff. We start breaking down below this. Everybody who got long here will start liquidating on a short term play because it's now, okay, I got long, I'm trapped. The traps get resolved once we really break these European lows. So do mind that with the 8:45 and 9 a.m. numbers. I love these little plays because psychologically, people who played the breakout are now stuck. And that's a short-term basis. We already have the long-term patterns in place. Let's just check the Nasdaq. Nasdaq holding up a little better, so the Nasdaq would really have to be a break below about 125. Let's see. September's about to tell June to hold my beer. Good comment. What's the lowest time? Well, again, they go lower. Remember, a 5-minute close below 62.5 key level is way lower than a daily close. What's the lowest level I generally trade on is 5 minutes. I'm more geared to 15-minute and an hour unless we're in momentum markets. I'll check on the 1 minute if we're in momentum markets or I'm looking for confirmation of patterns. Generally, I think some of the better trading, if you're trying to trade it intraday, is 15-minute to 1 hour time frames for the signals. You're welcome, Anissa. You're welcome, Lauren. UAL. Then I'm going to wrap this up. I actually got a mod. There we go. Ooh. Your next, we covered this the other day. I know you were trading this from the short side. Your next major support area, do not ignore this 33.80. Bottom, at least for lowering a stop. You break below there, I'd use that definitely for lowering the stop because you could get a little bounce below back to some of this key closing area. But below there, you then could get some potential acceleration to the downside in UAL. Serious question, gap fill in Nasdaq today looking likely. I mean, Not yet. Not yet. Because any break still above this 12,187, you're looking at 12,228. So any break up with the next, with the 8:45 or 9 a.m. numbers, the first, at least for a stop reduction, would have to be 12,228. Then you're into a clear path move. Then you can target this 12,282. So that's the only way. It's potential, and I would be why I'm watching the Qs now. Remember your key area. Then I'm calling it. Then I'm calling it a session, everybody. Come on, give me my lines. Why won't my lines work? There we go. 298's the level to watch for a closing, and a bounce play or a rotation play here, and then you get back up there. Then it's the gap fill play, and you have major resistance right there. That's the level I'm watching. SMAR. Then I'm done. That's going to be the last one. SMAR for the gap fill play. Your key levels, I'd be keying off of 32.37, then 32.59 to the upside. Do not ignore this area if you're trying to play the gap fill for a potential rollover, and then you get the 5-minute close at least above 32.59. Then I'd play for the. I would not ignore raising stops at 32.81 with the breakdown zone. That's on your very short term with the gap fill. Oops, crap. Longer term, any plays would be still to the bearish side on SMAR. Why? Because you have not closed yet below the 62.5, but you're going to break down. So I'd be watching, especially for a daily close, back below roughly 32.27. Then you're going to target the most recent lows. Any play, especially with this gap fill, would be a return to the daily rotation zone, and I'd start watching for another rotation down move. With that, I'm wrapping it up. I will talk to everyone later. Have a fantastic trading day. Bye for now.